We detected unusual trades on Robinhood stock, ticker symbol HOOD. And what's very unusual about this is that today Robinhood reports earnings October 30th after hours. And so in this video, we will analyze this unusual option activity to find out how wealthy investors are now trading Robinhood stock for earnings. Are they bullish and buying or bearish and selling? Because as we all know, the rich have more access to information, including leaked insider information, to make better financial decisions. No wonder the rich get richer. Now, as you can see, the stock is at a new high today. And if you've been following our channel, you know that last earnings on August 6th, we shared our trade in this video where we bought Robinhood stock before earnings. And as you can see, clearly it has been very profitable. In fact, more than 300% profits. So if you missed out on this video, we'll put a link to this video at the top here. Make sure to subscribe and hit the bell icon so you don't miss out on these very profitable opportunities. Now, how much profit did we make exactly? Well, let's take a deeper look at this trade before we analyze the new data and how we managed our trade. You can see here that these options that expired December 20 at the 21 strike calls, we originally bought them for $186 as we shared in that video. And you can see the profit now at $606 per trade. And so if we calculate the profit percentage of 606 divided by 186, the initial cost times 100, that is 325% profit. And so why is it so profitable? Well, take a look at these call options now. They are very deep in the money. These December 20 options at the 21 strike calls. We started to readjust our position. We still have some contracts left. You can see that Robinhood is trading at $28 per share. So we can easily get these 100 shares per contract at $21 a share because that was the strike price we bought them at. And we can sell it right back to the market for $28 a share. And that is why it is so profitable. These are very deep in the money now. They're worth somewhere between $720 to $790. And that is how we were able to make 325% profit on this trade. Now, because we have earnings coming up and there is data that is showing some bearish trades, as we can see now on the new options data here, there's actually some bearish trades. So this earnings coming up is higher risk. You can see 6,000 contracts for these 27 strike puts expiring November 15, December 20. Okay, this is a bearish trade. It could be a hedge though. Also, we have another one here. 2,000 contracts for these 27 strike calls, February 21st, paying $495 for each of these. Okay, so this is a bullish trade. Okay, so we have bullish and bearish. So there are mixed signals with this earnings. So it is higher risk. If you are interested in lower risk, higher probability of profit trades, then make sure to go to our website where we share better trade ideas than this one here. We'll put a link to our website up here if you're interested in gaining access to better trades with stronger data. Now, let's take a look at these trades in further detail. We can see here that these November 15 options, we said those 6,000 contracts at the 27 strike puts, clearly opening trades. You can see the volume much greater than the open interest of 1,950. So these are opening trades at the 27 strike puts. They were selling these puts and they went to the December 20 and they bought the 27 strike puts, 6,000 of them. You can see here, also opening trades greater than the open interest. And so this is a calendar trade here. You can see if we analyze this trade, after we take off hours, you can see that this is actually a slightly bearish trade with a negative delta here. Okay, so keep that in mind. Now, for the other trade, these February 21st, these are at the 27 strike calls. Opening trades, you can see 4,330 volume, greater than the open interest of 864. We are in this position now. We rolled our options to a further date, to the February 21st options, and we got into these 27 strike calls. And as we had just saw, they were buying these for $4.95 each. And so when you analyze this new trade, you can see here, this is their new trade. And it's also our new trade as well. What we did was we started to close out taking profits on our December 20 options at the 21 strike calls, where we had a profit of 606 per contract. And so for our trade, because we rolled from the 21 strike to the 27 strike, closing out of these, we actually have a credit trade. So it is not a $4.95 debit for us. We actually have to factor in the 606 profit. So we have a $111 credit per trade. Okay, so this is our new trade here, where we've readjusted and managed our trade. Essentially, we have no loss. Okay, you can see if the trade goes down, there is no negative loss. Why? Because we have $606 of profit, and we spent less than our profits. We are only using $495 out of that $606. Okay, so we still have locked in that $111 of profit per trade. So whether or not Robinhood goes down or up, we will be at a profit. Okay, we will be able to make more if it goes up more, but we will not be at a loss now. So we've locked in our profits, $111 per trade. So that is how we've managed our trade, locking in profits. We will continue to make more if it goes up. If not, that's okay too, because we will not be at a loss. So that is how we roll. If you want to learn more and join us in gaining access to better trade ideas than this one here, make sure to go to our website. We'll put a link at the top here. And if you missed out on this video on August 6th, before the previous earnings where we are able to get into this trade, we'll put a link over here. Take care and good luck. Have a wonderful day.